Good morning, everyone. This is Marshall Giller bringing you the morning comment for March 26th. Once again, the 110 barrier proved too much for Eurodollar. Despite more encouraging European data and disappointing US data, the pair spent only a few minutes above the 110 barrier before coming down again. The FX market appears to be settling down and reaching more of a consensus, as shown by the narrower and narrower trading range for Eurodollar each day. The big question is which direction the market will break out on, 110.45 or under 108.85. Oil prices surged yesterday on news that Saudi Arabia started bombing targets in Yemen. Yemen isn't a big oil producer, but at one end of the country lies a 3.2 kilometer wide bit of water called the Bab el Mandab Straits. An estimated 3.8 million barrels a day of oil flows through this narrow stretch as oil tankers sail from the Persian Gulf to the Suez Canal. If that were to be closed off, tankers would have to sail around Africa to reach markets in Europe and Americas. That would add many days to the journey and raise the cost of transport considerably. My view, though, is that in recent months we've seen numerous threats to Middle East oil supplies, and so far supplies have only increased. I'm going to be optimistic and assume that this time, too, it'll be a false alarm. Meanwhile, U.S. inventories just keep climbing and climbing, as yesterday's data showed. So I expect prices to hit new lows again within the next several months. However, it's impossible to tell when the market will turn from worrying about the fighting to worrying about storage again. It depends on how the fighting goes, to which nobody can predict. The increased tension in the Middle East is likely to weigh on currency markets as well. The Aussie and Kiwi were the worst performing currencies overnight as risk aversion hit the market, while the yen benefited from that, and also the oil-sensitive Norwegian krone and Canadian dollar gained. These moves could continue until we get more clarity about the Middle East situation. As for today's highlights, the Eurozone M3 money supply growth is forecast to have accelerated in February, and we could also see bank lending turn positive on a year-on-year basis for the first time since March of 2012. Such figures would add to the recent data indicating a nascent recovery in the European economy. In Norway, the AKU unemployment rate for January is forecast to remain unchanged at 3.7%. In the UK, retail sales for February are expected to rise, a turnaround from the previous month. This could strengthen sterling, at least temporarily, as rising retail sales in the UK are generally associated with a stronger pound. In the US, we get initial jobless claims for the weekend of March 21st. Also, the preliminary market service sector PMI for March is coming out. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX Global, wishing you solid trading.